Okay, ladies and gents, now we get to the time where you get your questions. Could I please ask all our speakers, Dr. Ritt, if you could come up, Evan, if you could come up again, Scott and Vicky Banwa. This is the opportunity for you now to obviously fire them with the very difficult questions, and urge you to make them difficult. And maybe we should start looking at solutions as well. So just wait till everybody gets up front. Thank you. We have a lovely mic at the back. We're just trying to sort out all the mics. Lynette, can you get a mic? Just need to get another. We just need to get some microphones because we need to pass around. Okay, so first of all, what I'm going to do is I'm going to direct the question at Nikki. Okay, you've given us the whole macro sort of viewpoint of South Africa. I know it's quite a depressing outlook. Can you maybe give us some, I know it's a difficult question for an economist, but give us some more practical steps what these people could do in this room, leading here today. What are the things we can do given the scenario that you've actually given to us? Because we'd like to walk away and say, well, what positive action can we take?
No, that is a tricky one for anybody, I think, to answer, not just the economist. I've got to stand up for my position. In all honesty, I think some diversification is required. So I think we've got two parties here talking about property globally and the possibilities that certainly the opportunity it offers. And I think that's true. I think the other thing that clearly is becoming highly inflated is the equity market. I think we're seeing the beginning of a correction. Equity markets globally is running very hard and very strong, often for reasons not related to fundamentals. And if you look at the South African equity market, it's been one of the best performing assets out there, yet you've got an economy that's deteriorating and earnings that are under pressure. So, and you ask yourself, how is that even possible? And I'll tell you very simply, there's a complete lack of option. Where are you going to put your money? People don't know what to do with their spare money, so they put it in the equity market. And so far, that sort of volume coming in has pushed up prices and served them well. But that has come to an end now. And I think once interest rates go up, you'll have more investment options. It's because we've had this excessively low interest rate environment with very high levels of debt and very little actual economic activity along with it. It's a very suppressed cycle. And it's not just in South Africa, it's been globally the case. You've got a different sort of cycle, which is typical when an economy is recovering from the sort of recession we had in advanced countries, which is associated with a property bubble bursting and a credit bubble bursting. So you have that sort of very slow economic growth. That takes investment options away from people. And I think what's happened in South Africa is those who have spare cash are simply parked in the equity market. And on average, without really thinking much about it, it has served them well. But if it looks too good to be true, it is too good to be true. So diversification, I would say, is one option. Going overseas looking for opportunity there is another option. Again, I would be careful here because there's a lot of things that can go wrong. And then, make your portfolio more conservative, certainly for the next 2 years or so. Which means that you do have to start looking a little bit more at money market funds, a little bit more towards conservative investments where you earn interest. I'm not saying use a bank deposit. There are all sorts of possibilities out there. But I would certainly make it a little bit more conservative, a little bit less loaded on this.
Great, thank you. I'll ask just one more question before I hand over. Can you hand the mic over to Erwin? Erwin, you know that there's quite a lot of pent-up demand in the residential market, and if you speak to any estate agent in the upper-end market, they'll tell you the property boom is back. All of a sudden, we've got a mass of investors coming from Africa and a lot of cash investors. What is your view on that? Do you think this is just a little short-term sort of thing? Do you want to just elaborate a little bit?
Yeah, it's very difficult to. I'm based at medium-term forecasts because you always get the short-term forecast wrong. My theory is that this little upsurge that we've seen is because of banks loosening their debt, the credit criteria. And the question is, how long can that last? If you were to talk to Nikki here, it seems that she reckons that it will last for a number of years. at the same time, if we're going to have a 200 bips increase in interest rates over the coming 2 years, say 2 to 3 years, that it's going to have the opposite effect on the house market. Not to mention the fact that I think middle class taxpayers are going to be under huge pressure for a very long time to come. So, as long as you are prepared to accept that affordability is an important driver of house prices, directly or indirectly, then I don't see affordability become better over the next number of years. And I think this little movement is purely because, as I said, because of credit, relaxation of credit criteria by the banks. Maybe you've got an idea about this.
Yeah, no, I think you have a point. Our view actually is that you're going to have a fairly subdued sort of. If we're judging the property market, you see, it's a matter of what you judge it by volume or by price. If you look at prices, they'll probably hold, but slightly above inflation, but they'll be subdued. You won't have a lot of upside growth there over the next 2 years. We are concerned about interest rates, but we do think volumes will slowly rise. And the reason we think volumes will slowly rise is simply because banks would be more willing to do their business, and given the population demographic, given the fact that it's more affordable housing that is growing in the high end of the market, you will just see this natural demand coming through. And if you just write a portion of that business as opposed to not writing it at all, which has been the case over the past 4 to 5 years, you're going to have growth. So that's where our predictions come from. But when I say growth, it's modest stuff. I mean, it's not, it's not 10, 11, 12%. Then on the interest rates, remember that it's moving from a very low base. It's going to go up another 200 basis points this year, 100 basis points, and you probably 300 basis points. In South African terms, you're still at very low interest rates. That's how I look at it.
Well, do you want to just extend a little bit on in terms of what action people could take, given sort of the economic scenarios? I know you like to talk about the averages and that kind of stuff, so, and beating those averages.
I agree with Nikki, diversification is the way to go. You've got to diversify into all manner of things. Don't just buy residential, buy commercial, industrial, hospitality, all that sort of thing. Don't just buy in one country, buy in different countries. But I'm kind of still in real estate. For me, it's too risky to try other sectors of the economy in other countries. I just don't know enough about them. And it's a bit like Mark Twain said, when you have a basket of eggs, look after it very well. How many different things do you want to manage? And whether we like it or not, and it'll sound self-serving, but it's not. This is where crowdfunding really is making an impact, because you no longer need to be the expert in all those things. You can rely on other people to do it. I don't need to try cocaine to see if it's for me. I'm happy to rely on the experience of other people, and it goes against the grain. Because many people say experience is the best teacher, and you know what it is, but it doesn't need to be your own. So that's why you'll notice I was in the room all along, and I come along and I listen to Irvin and Nikki and everyone else and Scott. That's why we're working together. Because you never learn less. The more you learn, the better off you are, the more fluid your decisions can be. And that's why I just want to appreciate you all for being here, because you're here in an endeavor, and I hope you've gone some way towards fulfilling that, to learn more so that you can make smarter decisions. And don't just listen to the people with the great theories and the eloquent speakers. Look at the results. Success leaves a trail. So, there's that saying that what you do speaks so loudly to me, I can't hear what you're saying. So see what they're doing, and then follow that. And I think you'll find that the successful people here, I see two trends here in South Africa. One is some people are saying so many people have left South Africa that the opportunities here are huge. I mean, look at Henny Bezodnak, one of our partners. Building 14 hospitals here in South Africa, is that awesome? I mean, it's not just awesome for him, it's awesome for the people who are going to use it. So there is a definite need, and if you can find your niche, you can fill it and do well with it. And then the other trend is people who see the writing on the wall. Nikki presented it very clearly. The trend as to what's happening with the South African rand and various other things. Why would you have 100% of your eggs in this basket? And without trying to give you the longer answer that you wanted. You're not being seditious to South Africa by investing overseas, because ultimately you'll bring that capital back in the form of rental returns or capital growth or whatever. So you're probably helping South Africa more than the very critics who are telling you off for taking money overseas. It's a very interesting point.
Scott, I just want to bring you in a comment because you've invested offshore a lot, so you've got a lot of experience in that kind of stuff. You know, it's all crowdfunding. Just elaborate a little bit more what Dolph was saying in terms of investing offshore, some of your successes and that kind of stuff. Give people a little bit of comfort.
I think the first thing I'd say about investing offshore is that people can remember back how scared they were when they bought their first house. It never changes. Every single time you invest in a new country, in fact, even every time you invest in a new city, that feeling is pretty much the same, whether it's residential or commercial. So, again, I believe we simplify things. Make sure you get the right information. And again, there's many places you get the right information, so you've got to be quite careful as to what that right information is. And then most importantly, it's the partners on the ground. You know, I was in Vegas in 2010, and Dolph talks about how Vegas has been a great market. I could have picked up a 4-bedroom house for $80,000. It was incredible. It used to be worth $320,000. And I didn't buy the property for one reason only, because I couldn't find people on the ground I could trust. And it doesn't matter how good the opportunity is, unless you've got someone on the ground to execute, you will not be able to get the realize the potential. And that's why for me it's all about partnerships. So basically following those long-term trends and finding the right partners is what I believe is my objective and the value I bring to the table. And what's exciting with crowdfunding is that now it's no longer just a couple of us running around. The crowd can tell us, like on eBay, whether people are good or not, and that's what really excites me.
Fantastic. Right, do you want to open up to the floor? We've got a mic over there, please. Anybody? I'm sure there are lots of questions over here. The net, microphone, and just your name, company, and just really directing your question to.
Lyndon from Nedbank. I have two questions and they follow on. And I'd like to start with Dr. Dolph and Scott by asking how accessible is this crowdfunding concept of yours to our very low income sector in this country that, and Nikki alluded to the guys that literally cannot even afford to travel from one side of the city to the other. And then once that's answered, I've got a question for Nikki that I just want to pose, please.
So the beauty with the crowdfunding is that the reason that the best deals generally have only been for wealthy people is that when a person has to deal with another person, so if I'm a financial advisor, I only want to deal with people with lots of money because every person takes time and effort. But when I buy a song on iTunes, there's no human interaction. So because it's a computer system, the barriers to entry drop lower and lower and lower. To answer your question, we're currently talking, and I'm not going to give away too much yet because it's not completely finished. But we're going as low as where people can put in 10 Rand a month and have access to it. So that when you think about the scale in affordability, in affordable housing and the wealth effect, and you only have to teach someone who's making, saving 10 Rand a month how to make 1 Rand. The rest will take care of itself. And I think, while I hand over Dolph, I wouldn't mind just reading that little quote out of the book from Jim Rogers. While Dolph's getting, I'll grab the book because he sums it up perfectly. There's a quote from Abraham Lincoln that I think really emphasizes what you're asking.
There's nothing much I can add to that. The huge difference between crowdfunding and non-crowdfunding is that barrier in terms of rand value or dollar value has come way down by a factor of 1,000 or 1,000,000. Another reason why the good deals are only available to the select few, you must have had agents come to you and say, listen, here's something that's not on the market yet, but because you act quickly, we'll offer it to you first. It reduces their cost. And now they're going to come to the crowdfunding portals because we can act even faster because it's all automated. It's exactly what Scott's here. And it's just like all those other things. The reason why the Arab Spring was possible is it was fast. It's done by computers at the speed of light now instead of by human interaction. And it's going to happen whether we like it or not, whether we want it or not. In a way, I lament the fact that it's happening, and for a specific reason. I always stated that it was very difficult for me to make money on the stock market because what I would pay for a stock of IBM or HP or anything else would be identical to what someone in Ghana would pay, or in New York City, or in Helsinki, Finland, because it's all on one big computer network. There was no arbitrage. Whereas when you find a property that's for sale by owner, it's not even listed with a multiple listing service or real estate agents, then it's just the people who happen to drive by and see for sale by owner who would bother to knock on the door. Some owners have an inflated impression of what their property's worth, they'll never sell it. But equally, some will sell it for 2/3 or 3/4 of its true value, and you can stumble across this. It will never happen with an automated system. So that's the one minor catch. But the commensurate advantage is that we can now go online. Instead of sitting in this panel here, all of us could open our smartphones or tablets or computers and look at properties just about anywhere else in the world. I mean, what an opportunity that is. It was never possible, 20 years ago. It would never occur to us.
Abraham Lincoln said, "Let not him who is houseless pull down the house of another, but let him labor diligently and build one for himself, thus by example assuring that his own shall be saved from violence when built." I think really when you think about the impact, that if you can empower everyone on this planet to have something little, we will all benefit basically. And whether that's other people or whether it's yourself, many people haven't been able to invest overseas or invest in commercial or invest in great opportunities, and now we've all got access to it. So, yeah.
It's now possible to have your first foreign investment before you have your first passport. It's kind of cool. When you think about it.
Nikki, this is the million-dollar question here. What would you do to rectify our economy and to get us back on track?
You know what? We actually all know what to do. That's maybe one of the most frustrating things of being a South African, is we actually all know what to do. Government knows what to do too. Under Trevor Manuel, he appointed Professor Spence from the London School of Economics, and he led basically a whole sort of study of countries that have grown at a rate of 7% for a period of 7% or above for a period of 25 years. And he looked at what they had and what did they do that set them apart from other countries. And a whole bunch of useful things came out of there. I actually have a slide on it, but I didn't include it in this particular presentation because I had a fairly narrow focus. But we know what to do, and from there, the National Development Plan, using that study and that research, which was very thorough, and really was based on some of the best experts you have out there in terms of growth theories and how economies grow and what you need to have in place. They took that and they put together the National Development Plan. Then the National Development Plan got exposed to South African politics, and it was tinkered here and there to have the right ideological flavouring, if you like. But in essence, the National Development Plan deals with what we need to do. So if you look at what's holding us back, which is a whole different presentation, but what's holding us back at the moment is inadequate infrastructure, expensive infrastructure, troubles in the labour market. And if you look at the labour market, there are two equations. There's wages and there's productivity. If you focus just on wages, inequality becomes an issue. And I think there's a lot that can be said about inequality in South Africa. And there is some work that can be done on that. But then there's productivity, which relates back to education. Okay? So if we think about what we need to do to grow faster, sometimes it gets painfully simple. Finish a power plant. Finish a power plant and you're with a massive constraint on South African industry. So all of those little bits that we add to the system ultimately will help. And you think of how government failures have affected the way we live and the way we think. I don't know what it's like in Durban, but it's been the beginning of rolling blackouts in Johannesburg. At the moment, half of Johannesburg is without water. Okay. So in response, what have we done? We've gotten inverters and it's all pushed up the cost of just living in this country. Now we're all thinking of putting water tanks in, and I don't know what else. So it just gives you a sense. If that's the case for us, multiply it for a business. If that's the case for an individual, multiply it for a business, and you get a sense of why they feel like they're facing these devastating costs. And then another very simple thing we can do, is remove uncertainty. So instead of entertaining these hugely frightening ideas like we did for almost a decade, the notion of nationalizing mines, we didn't put it in economic policy. We didn't go to that extreme. But just the fact that we entertained it chased a lot of people away that would have invested in South African mining. And we've never met them. We don't know who they are. We can't quantify them. You know what I'm saying? So don't entertain them dangerous ideas. And now to really test that and really tease people, we've now come up with the agricultural land reform proposals, which I think you've all heard. That is a legislative risk for your business too. Because if they were to go ahead with it, it's essentially expropriation without compensation. It might not be for the full value of the farm that you have compensated. You don't lose everything. It's not Zimbabwean style land grab, but you lose a portion. And the end result would simply be that it will have a ripple effect into residential, into commercial, into industrial policy. So there's a legislative risk. So very simply put, define the role of the state versus the private sector, stick to it, and provide that clarity.
Great. Just on this side, please, question here. You'll just introduce yourself, the company, and do your questions directly.
Bill Gabriel, CR Property Broker. Scott, you mentioned closing on a medical center, which in America, using crowdfunding. Are there still opportunities there? What sort of opportunities are there?
That one's closed, but what we have done is we've set it up, and obviously there's about another 4 opportunities in the pipeline. And so what we've done, obviously, in crowdfunding, the beauty of crowdfunding is that people can get ready, and so when the deals come online or the opportunities come online, then they can participate. But in the 3 mega trends that we see, medical, oil, and the residential, but in specific markets, people can actually get involved. There's a way through the SEC that they can actually get involved. They can register an interest, and then once an opportunity arrives that meets their requirements, they can participate.
Great. More questions? Come on, Durban, you start off so lively. Come on, I'm sure there's loads of questions. Your name, company, and your directed question.
My name is Justin Haynes, I'm with Max Pop. I'd just like to get some comment on the relationship of the Rand international commodities. Because if you're looking at investing, you can't escape the fact that you have to use your currency. And if the Rand in 2011, I think it was 10 Rand to the dollar, it's now 18. There's a substantial risk that it may reverse that trend. 18 pounds, sorry. May reverse that trend, and we could then have to use 50% of our revenue to go offshore. So is there a study of the relationship of the Rand to international commodities, and how do you see that going when the world economy strengthens?
Well, when the world economy strengthens, it's generally good for the dollar. You understand? So the relationship between global growth, especially if it's led by the US, is positive for the dollar. Now you must remember that we're coming out of an extraordinary period. We had the global financial crisis, and it wasn't a tiny crisis. It was a massive crisis. And banking terms, if we think about it in economic terms, it was a 1 in 80-year event, so we had to put a probability to it. It resulted in one of the worst recessions ever experienced in advanced countries, in terms of how deep it was, in terms of how much damage it created, in terms of job losses, income loss, and wealth destruction. It was equivalent to what they experienced in 1945. So that gives you an indication of how extraordinary it was. Now, any recovery from that kind of loss is never a simple equation. And it never occurs in a straight line. And it never, it's not just this big bounce back and you're back to where you were and everything returns to normal. One of the things about this particular recovery is to get the world economy going, in the US they had to resort to extraordinary monetary policy. Now US interest rates are near zero. Japan's interest rates are at zero. The UK is near zero. The Eurozone will probably come to zero. In fact, Eurozone interest rates are negative. Banks now have to pay the central bank to deposit their money at the European Central Bank. The idea is to force people banks to lend out money. So that gives you an indication. Interest rates are at extraordinary, in history, unheard of low levels. Okay? Debt is an extraordinary high levels, which is what Erwin referred to as long period of the leveraging that lies ahead of us. The countries that do it faster are the countries that will recover quicker. Okay? So the countries that can get rid of their debt quicker will be the countries that grow faster. And at the same time, there's been a lot of liquidity washing around in the system. Now, you say to me, how is that possible? Because in order to stimulate the economies, the US found that interest rates didn't work because debt was too high. Okay? So you could cut interest rates to zero and it had no impact on the demand for credit. Why? Because people burned their fingers with too high debt. Now you want to encourage them to take on more debt in order to grow the economy. It didn't work. So interest rates were ineffective. We call that the liquidity trap for interest rates. Because the interest rates were ineffective. So they did what? They resorted to your more exotic monetary policy, so-called quantitative easing. That's just the act of printing money in layman's terms. And no one has printed money, more money than the US. They take the price for it. They put Zimbabwe to shame. The steam coming off the printing press in the US is unbelievable. So they had a QE1, which was almost $3 trillion. They had a QE2, which is another $600 billion. They had an Operation Twist, which is the indirect way of printing money. Then in August 2012, if you recall correctly, the US government did its constitutional debt ceiling. And they left it to the 11th hour to push it up. And there was this risk of default. Now, in the moment of that massive public government incompetence, the central bank and the US Federal Reserve said, okay, we give up. We'll print $80 billion for as long as it takes, on a monthly basis, for as long as it takes to get US unemployment down to around 6% and get the US economy growing. So you're pushing this liquidity into the system. It runs through the financial sector in liquidity, always looking for a home, isn't it? Now, property used to be the home, it wasn't the home anymore. So where did it go? It went to anything related initially to the China story. So it went into gold, and it went into iron ore, and it went into copper, and it went into any country that would benefit from China's growth, including other emerging markets like South Africa. It came to our bond market, our government debt market, because we offered higher returns. So we're looking for higher returns in places, because in your low-risk countries like the US, interest rates were near zero. So it was an insult, it was an admittance of a return. Now what's happening is all that effort the US put into recovering its economy, which was very dramatic and extraordinary measures they took, is starting to pay off. It's starting to work. Right? The Americans don't believe that suffering makes you a better person in the long run. Okay, they're about pursuit of happiness. That's why they printed so much money. The Europeans wanted to do it the virtuous way. First cut the debt and then grow. But they've now also come to the conclusion you've got to keep at least some of the bus running. If it's dead, it's dead, and it doesn't matter how much debt you have. It virtually is irrelevant. So the Americans taking off now. So what's going to happen now? They've indicated in May last year that they're going to start withdrawing quantitative easing. So they're telling you already they're tightening their monetary policy. They started in October of last year. They're adding less and less liquidity to the system. October this year, they stopped adding liquidity to the system. In that environment, the dollar environment neutralizes. So if they're not going to print dollars anymore, it means there will be less and less dollars in the system. What should happen to the price of something if it is scarce? Go up. So you understand? The world in which we are now will be good for the dollar. And as the dollar strengthens, other countries' currencies in relative terms will be under pressure. And that applies to all emerging markets and all other currencies, including the pound and the euro. So the end result is our ability to hold some kind of value against the dollar going forward over the next 5 to 10 years will depend on the return we offer versus the risk we offer. Now, right now, our risks don't stack up really well. If you have confidence in our political leadership, in our government, in our institutions, and you believe we have the capacity to solve those risks quickly, you'll have a stronger view of the rand than we do. We have not that much faith in it. We don't think it's going to fall apart, but we think it will probably, the risks won't be removed quickly. They will persist with us for a while to come. At the same time, we've got a different political landscape. We've got all sorts of interesting new parties that have very exciting uniforms, and that's absolutely quite interesting to investors. That might actually turn out positive. You see, now at the moment we perceive the Malemas of the world as a risk, but it seems that Malema is the one person that is insisting that government do their job and answer to the people of South Africa. So, you can't always qualify risk, and suddenly turn into a positive thing. Brazil appointed a labor unionist as their president who became, sort of a very good president that led them and was very favorable to businesses and the private sector and the growth of the private sector as well. So sometimes risk can be a surprising thing. It looks horrible now, but it doesn't turn out that bad. But ultimately, we say we're going to have risk, which means we know the rand's under pressure. Then it is an equation of to what extent. Okay. So how do we relate to the rest of the world? Currencies are a relative game. The rand, by the way, is one of the most liquid currencies in the emerging markets. It is heavily traded, and it is a speculator's dream because you can get in and out very, very quickly. And sometimes in the banking industry, we see these movements coming in overnight. Okay? So the rand is very difficult to predict. But what I can tell you is over the next 3 to 5 years, there will be downward pressure on the rand. So to go for the dollar, or even to go for the euro, isn't a bad idea. It can't be. But you can't look at it from a day-to-day basis and get all panicky about it. Because you're going to be considering suicide after a year. Possibly even a month. Okay.
Can I just say something quickly as well to that gentleman? In the book that I'm giving you, there's an entire chapter 2 where we did that analysis, very much on what you were talking about there, and the impact on property and the impact on investment. So when you take a look at chapter 2, it will give you some really good, there's a guy called James Painter that can give you some really good insights into that from the property perspective.
Great, we're going to take 2 more. Yeah.
Thanks, Edwin from Metro as well. Just 2 questions. I think the first one's quite quick. I saw at a recent conference a chart of South Africa's population growth, and I was surprised to see that it was constant, not growing. Can this be confirmed, or was the conference out?
No, it's not accelerated. It's not accelerated. So it has stabilized, but it's positive, which is the key thing. There was now in Europe they've had 2 decades of negative population growth. In Japan, slightly over 2 decades of negative population growth. And it's like saying the aging of the population that changes the structure of an economy. So Europe faces real challenges, especially the high indebted countries in Europe, because they sit with high debt levels and they sit with a fading population of tax payers. Okay. So for Europe, the answer is open up the borders and let the North Africans in. They're not very happy. Okay, stop chasing them away, open them up, welcome them the younger population, or start, having babies at the rate of knots. That's basically their solution. So, in all honesty, from a property perspective, you should be looking at that. Europe should make sense. There should be opportunities there for an investor, especially to pick up things cheaply. So in our case, it's steady, but it's positive.
No, that was a far more eloquent answer that I was going to come up with. I was going to say, I'm not sure what's happening to the population here, but I'm not contributing to it.
From a property point of view, I'd like to make a statement that population itself, is not the driver of property value. You must have the purchasing power to convert that into purchasing power. So mere fact that so many thousands are fluxing into Joburg and to Cape Town and so on, I'm sorry, I can't see how it is going to benefit your conventional property market.
Thanks for that. Just the second question is for Scott and Dr. Dole. I've recently taken quite a large property deal overseas, and I think we are from National for very urban focused. Now, I think that question comes twofold: is what is Durban's competitive advantages? And secondly, on your crowdfunding, will you guys look at a Durban opportunity in terms of your crowdfunding platform? And maybe the third question, or the third part of this, is that how difficult is it to set up a crowdfunding platform? What makes sense for us to bring it to you rather than set up our platform?
I started with Dom. I started a company in 2003 helping people invest into South Africa. So I lived in London, we had offices in Dubai and the UK and Australia, etc. And I can tell you it's virtually impossible to get people overseas to want to invest in South Africa. For all the reasons that you've been talking about. whether it's the biggest companies of Bulletin or whether it's just Josh Soap that wants to do investment, it's actually not even worth your energy, in my opinion. So much so that we've done it and we don't do it anymore. To put in perspective, we had 400, we used to sell about 400 units a year overseas in just London. In 2009 it was 19 units, and in 2010 it was 0. So, been there, done it. And I'm not being disrespectful, it's just the truth. And the second part was, when we look at things in Durban, certainly, but it comes back to the three things. Are we dealing with a person with extensive track record? Are they in a niche, so they're not just trying to do everything? And thirdly, is it scalable? We don't want to build out the tower, make mistakes, and not be able to do it again. And the third question, just on the crowdfunding portal side, I've been working on it for 16 years, and basically we tried to get developers to build it for over 2 years. We tried to get lawyers to be able to tell us how to do it for over 5 years. We finally cracked it, and we're investing.
I think so.
Okay, we're investing over 500,000 rand, actually about 600,000 rand a month, just and have been for the last 12 months in the architecture behind the system. You can have a spreadsheet or you can have Salesforce, but they're not the same.
I think you've summed it up. The only thing I'd add to that is whether or not we'd recommend people to invest in Durban has got nothing to do with the desirability of living here. I think it's beautiful, competitive advantages, weather, scenery, sea views, all that sort of thing. But when you choose whether or not to invest somewhere, it's more than just those competitive advantages. You've got to look at the long-term trends that you alluded to in terms of population growth. I love Japan, you know, I speak the language, it's clean, it's efficient, it's safe. When you drop your wallet there, about 10 people run to pick it up, not to steal it, but to say, excuse me, you left your wallet behind. The first time no, serious, the first time I took a taxi ride, I remember the numbers, it came to 540 yen, and I thought, I'm not in New Zealand, we don't tip there, not because we don't believe in it, it's culturally just not done. So I thought I'd better leave them a tip, so I gave them 600 yen. And I said, keep the change. And he looked at me and he said, was there something wrong with the ride? And I thought, oh my gosh, I haven't tipped him enough. You know, I said, no, on the contrary, it was superb. He said, then why demean me by giving me more than the meter says? Why try to prove that you're better than me? Here's the change. Now please get out of my car. So it's culturally different, right? I love it there. It's so safe and everything's so modern and all that. But I haven't invested a cent there, because their population is in decline. It's currently at about 128 million or so, and they expect within one generation the shrinkage is going to increase because of the bulge, the baby boomer bulge. Within a generation, it's going to dip below 100 million. That's good for getting rid of pollution and congestion and all that sort of stuff, but it's bad for capital growth and property values. In this case, everyone in Japan has the means to buy real estate. So Erwin's completely right. But it's not just population, it's their ability to buy. So anyway, I mean, you know...
Could I just say one more thing on that? And in simple terms, you know, you can build Kalahari, but it still links into Amazon. And our whole purpose is, again, not about competition, but about partnership. So if you're here and you're wanting to build a bookstore, you know, don't take on Amazon, figure out how to partner with Amazon, because that's the way the world works now. And so for us, it's all about partnership. We welcome partners. It's not about competition. But there's no point in trying to build something to compete with Amazon.
Great, got a question here?
Today, my name is Diane Franks, also from MaxPlot. My question is to the two economists, and that is the proposed nuclear power infrastructure. Do you think that could actually sink South Africa in terms of sovereign debt?
We're pleased you didn't say could have blow it up.
Listen, we're building on Medupi now. Yeah, we haven't got one unit on. Eskom tells us end of this year, early part of next year. The nuclear power stations will, as I understand it, Eskom will not be a bidder for those. They will be done in a more independent fashion. Do we need power? Yes. Are we going to add that to our debt burden now? No. No. This is years into the future. Okay. So I don't think you need to get anxious about that just yet. Okay. Let's just deal with our already considerable challenges. Don't worry about the nuclear power stations at some later stage.
Absolutely worry about it.
But talking about power stations, China is commissioning one power station every day. They have a population that's about 30 times greater than that of South Africa, so on that basis, based on population, and we should be commissioning one here about one a month. And I suspect we're not doing that. Part of it is logistics, and they've got reserves, and they're on a growth curve. They're on a different economic cycle, let alone a different part of it. But another aspect is that they've got a can-do attitude, and I think part of it too is we need to change attitudes here to make us believe that this is worth doing.
I'm going to take one last question from the floor. One last question, anybody? Come on, good. Okay, one last question over here, and then I'm going to ask the panel to wrap up each information. So your name and your company and your question.
My name is Graham Allen from Alba Property Services. Scott, you mentioned crowdfunding into oil. Is that business? Is that land? Is that property and land? Exactly what did you mean by that?
Sorry, just to be clear there, we only do real estate. I don't know anything about oil, and I'm not going to start trying to learn about it. So, as an example, in North Dakota, it's one of the biggest things that's happening in North America at the moment in terms of the oil reserves that they found there. It takes 28 men to drill a well, and it takes 3 men to look after a well. And we're going after building small factory lids that ultimately those blue-collar workers that need to service all those wells can take their big medium-density trucks with all their equipment, they can fix the wells, they can come back. So effectively, we're creating the flex space, as they call it in America, little mini factories to be able to look after it. We've looked at residential, we've looked at commercial, we're possibly going to build a regional shopping centre with one of the biggest South African shopping centre players, but it's all about partnership, but we want to be specific in that oil areas because they are economically resilient pretty much no matter what happens.
Okay, great. Ladies and gents, I'm now going to ask the team just to give us a little bit of a wrap-up. I'm going to go Scott, Nikki, and Adolf, and then I want Erwin just to do the final wrap. So starting with you, Scott, if you can just give us a summation, closing comments from your side.
Cool, well, thanks for everyone for being here. It's always fun to share what is changing, and I think all I can say is that I know it's new, and I know many of you in the room might think that we're a little bit ahead of the game or talking about something that won't happen. We had someone yesterday ask us what cloud funding was. But anyway, it is becoming an absolute reality. It will revolutionize things, and like I said in conclusion last time, you get 2 choices. It will either change the way you do things to your benefit or to your detriment, but it's happening anyway, and so I'd suggest you join the ride and understand what's happening.
Thank you.
Yes, I mean, from our perspective, what I would probably like to put through to you for my presentation is that over the next year and a half, it's still cautious time. There will be periods where you will see heightened risk. There will be greater uncertainty. And really from 2006 onwards, we will return to some form of trend growth and some kind of normalization. And a lot of these assumptions are based on the fact that the world economy will slowly heal. So you can see a lot of in this world is interdependent, and our performances to a large degree is influenced by what happens in the rest of the world. So my message would be, be responsible. If you've got debt, get rid of that first. If you've got funds to invest, diversify.
Joel?
Well, thank you. It's an honour to be here. I think we've said it all, and as these summaries go on and on, there's less to add to that, other than, you know, the sun rises every morning and will continue to do so long after we're gone. And a real measure of, you know, it's not enough just to be here, a real measure of the value of being here is what are you going to do as a result of having been here. So I applaud you for being here. Some of you might have got time off work to come here and give a call. It's free breakfast and I get to sit down. But can this change your life? Because what happens, apparently, so they say when you're really old and you look back on life, you don't regret the things you did that you shouldn't have done. You regret the things you didn't do that you could have done. And you've now had a vision as to the way the world might be heading, and I think if you think about it and act on it, you'll be better off for it. Thank you very much.
Well, I don't think I can improve on my presentation. apart from saying that I'm one of the skeptics about the world economy. Problem being that as they start normalizing, they'll have to start upping their interest rates, which in turn will of course depress growth. And that's the reason why I'm looking forward, not looking forward, but looking forward to a long period of stagnation in the world economy. Possible exception is China, but I don't understand China. So, what are the implications for us in the property game? Well, property is a long-term gain, but don't base your investment strategy on strong capital growth. Be mindful of the importance of cash flow. If you're going to base your investment strategy on an expected capital growth and it's not forthcoming, you've got a negative cash flow, as so many private investors are, I understand, experiencing as we speak, that's a serious problem.
Great, I'd just like to thank all our panelists, Dolph Duris. And Dolph has got a lot to add. I mean, he's got some books outside. He's also involved in the crowdfunding. Of course, Irvin, the Rotary report is a very well-known report. I highly recommend. You can also talk to Irvin or even to the net at the back about that and the evaluation services. We've got Nikki who says that the floodgates have been opened at Nedbank for mortgages. If you're looking for a mortgage, go to Nedbank. And then, of course, we've got Scott with crowdfunding. I'd like to thank you, our panelists. Thank you very much. I think it's been a very insightful day. And then to you, the audience, thank you for participating. Durban, I think you're fantastic. Thank you very much. My name is Thank you for your support. Thank you.